Good morning, everyone, and thank you for joining us on Morning Markets from the team at True Potential. Today we'll look back on how asset markets performed last week and then look forward to what information and events are likely to shape how asset markets will perform the week ahead. So just looking at last week, in terms of the major equity markets, we saw the majority of markets over the course of the week gain further. We saw in the US, the S&P up about 1.3%, the Nasdaq up over 3% on the week, and then that more economically sensitive, the Russell 2000 up of around 3% as well. Similar pictures in Europe, where the Euro Stoxx 600 was up about 1%. Asia also up over 1% on the week. The one standout around that is around the FTSE 100, where the FTSE did fall over the course of the week. And some of that is driven by the move that we saw in sterling over the course of the week. Although it was volatile, it did strengthen, and that's usually a negative for those large export-orientated businesses in the FTSE 100. Just looking at the bond market then, very little change in sovereign bond markets over the course of the week. At the margin, yields did move out ever so slightly across the curve, but nothing really significant to report. In the corporate bond market, we continue to see spreads coming in, and indeed in several of areas we would say that spreads are now below the levels that they were back in March prior to the impacts of COVID-19 working its way through. As I've touched on, currency markets volatile last week, driven by the news and I suppose two things really. News around Brexit discussions impacting sterling specifically, and then in terms of the euro and the strength that we saw there, some weakness of the dollar, but also just better economic data in Europe over the course of the week. However, I would caution that data was prior to the recent round of additional lockdown measures and restrictions that have been announced, so there will be some skewing to the forward-looking data as a result. Just then in commodities last week, it was very much really about industrial commodities and the strength of industrial commodities. So thinking there about oil, iron ore and copper, all had relatively good weeks last week as well. So again, speaking into that sort of push and pull that we have in markets at the moment between the ongoing recovery, particularly in manufacturing, but then the challenges that COVID-19 continues to present, and then further along as we've been seeing the rollout of vaccines. So thinking to the week ahead, a number of things to focus upon. One will be around the US Congress. Now we got information overnight that they have agreed on a $900 billion fiscal support package, which is good news. It's only taken us many months, but that's one of these negotiations that have been influencing market sentiment completed. And that will see an extension of the pandemic unemployment support packages through to the end of March, given we've discussed here how they were expiring at the end of this month. So that's a positive. And then we'll get additional detail on the overall shape of the package as that gets voted through, hopefully today and tomorrow. In the UK, continuing to look for a conclusion or some form of indication as to where we are with the Brexit trade discussions. Clearly with a deadline of Sunday for that to be completed, we've pushed on into Monday where they continue to discuss what is happening. In terms of the impact that we've seen on this in Asia trading specifically, we've seen sterling weaken about 1% over the course of trading, and that's been very much a reflection on two things. One, the uncertainty that continues to be caused by the Brexit discussions, but then the additional restrictive measures that were announced for the UK, parts of London and the southeast over the weekend, which has had an impact on sentiment. And also, I suppose, the additional factor there is the travel restrictions into Europe as well that are starting to have an impact. Now, this is a function of, I suppose, where we are at this point in time. It will at some point have and will have an impact on economic activity going forward. And that's something that we're just going to have to continue to monitor as to how that plays its way through the data in the coming weeks and coming months. Just one other thing to mention, we've touched on how the European and the UK regulators have allowed banks to start to return capital to shareholders by way of dividends, share buybacks, etc., but with quite restrictive measures attached to them. We heard from the Federal Reserve in the US on Friday as to their attitude to US banks returning capital to shareholders, and they've been probably less restrictive, I would argue, than the UK and European regulators, allowing banks to start to pay dividends and share buybacks specifically. That's the more normal way of returning capital in the US. So share buybacks returning for a number of the large US banks post announcements on Friday. And that saw pretty positive share price reactions from major US banks. So we'll see how that plays out in the market today as well. Just thinking about then economic data releases over the course of the week. Well, we'll have some personal expenditure data and inflation data in the US. Relatively few data points in Europe over the course of the week. Some consumer confidence numbers, but again taken before the latest round of restrictions. That's it for today. Please do join us again tomorrow. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.